Welcome to DeFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
What's up, guys? It's your boy Andy. Real quick, just want to tell you about the sponsors that make the DeFi by Design podcast possible. First, we have 𝗷𝗶𝗶. 𝗷𝗶𝗶 is a non-custodial money market protocol where you can go and leverage your assets and earn interest. So you can go in there and deposit about 10 or 20 assets, ETH, any stable coins, wrap Bitcoin, a whole bunch link, and you can lend them and you can borrow tokens to go long, to go short, to earn interest. Head over to app.𝗷𝗶.com. Check it out. They have V2 is coming soon. Check out 𝗷𝗶𝗶. Next, we have DeFi. DeFi is a layer 2 gasless decentralized exchange on Ethereum. They use Starkware to conduct their trades on layer 2. The token 𝗵𝗶𝗃 has a liquidity mining scheme ongoing, and they have a bunch of cool stuff coming in. So if you want to trade on L2 in order books, not just swaps, check out DeFi. They're awesome. With that being said, let's get right back to the show. I hope you guys enjoy. And again, check out 𝗷𝗶𝗶 at app.𝗷𝗶.com and DeFi at 𝗵𝗶𝗶.com to lend and borrow and trade on L2. Cheers, guys.
Welcome, everyone, to episode 17 of the DeFi by Design podcast. Today, we have a very special guest, Henrik, one of the co-founders of 𝗍𝗵𝗃. Remember, 𝗍𝗵𝗃 is a decentralized system or protocol for hedge funds, and it allows lots of users, anyone, to spin up their own fund and people to contribute to it. I'll let Henrik go into some more of the details. Henrik, how you doing today, man?
Good. How are you?
Good. So maybe you could start it off by saying a little bit about yourself, how you got started at 𝗍𝗵𝗃, and your journey, since you've been there, and then we'll go from there.
Sure. So my background is in traditional finance. I spent some 15 years in mostly quant equities, also institutional equity sales. I'm originally from Sweden. I also worked in Singapore, spent 10 years in New York, and got into crypto 7 years ago. And first Bitcoin, and then sort of the wider crypto ecosystem. I moved to Australia with my family 5 years ago now. Started one of Australia's first crypto funds called 𝗵𝗶𝗰𝗵 Capital. Been running that for close to 3 years now. Investing heavily in the DeFi space, kind of the low-hanging fruit for smart contracts being financial contracts. So before we knew about the word DeFi, we invested into financial applications, built mostly on Ethereum, and we thought a lot about DeFi applications and what will be the core primitives being built in the DeFi ecosystem. I co-founded a DeFi protocol called 𝗵𝗶𝗃 together with one of my previous analysts at Apollo called James Simpson. And at about the same time, I had the idea for 𝗍𝗵𝗃, which is, as you said, Robert, decentralized asset management protocol that we are building. I had the idea a bit over 2 years ago for 𝗍𝗵𝗃. I thought it would be a really cool product to build a non-custodial, trustless, permissionless, essentially a copy trading platform on top of Ethereum. But I didn't really understand how to do that. There are things to overcome, right? So how do you let the managers on a decentralized asset management platform trade? How do you get them access to a wide range of assets? How can you let them trade with a low slippage? How do you make sure that the users' funds are safe? Because even if they're non-custodial, if you let the managers trade any asset out there, they could create their own asset and kind of manipulate price of the pool, or they could incur huge slippage trading on decentralized exchanges. So this is a pretty hard thing to overcome. But during, I think the last 18 months, I became very familiar with Synthetix. Apollo was one of the early investors in Synthetix, which are also originally based out of Australia. And discussing Synthetix with their co-founder Kane, I realized that Synthetix would be the perfect platform to build 𝗍𝗵𝗃 on. And then that's when I got together with the co-founders and we started building 𝗍𝗵𝗃 at the beginning of this year. And we have some great backers for the project, and we finally launched mainnet almost 4 weeks ago now. We are kind of in a very intense growth phase at the moment with a lot of features that will be rolled out over the coming days and weeks, and we are super excited about the launch and what we have in the pipeline. So yeah, I think there's great potential for a new primitive in DeFi around decentralized asset management. I don't think we've seen this vertical, if you like, being tried yet in a way that's really user-friendly and kind of unleash the potential in this space.
Awesome. It's really cool how you mentioned Synthetix was kind of the springboard that dHedge was built on. That's one of the coolest aspects of the DeFi ecosystem and really just the emerging digital economy. How all these pieces are composable together and they're allowing for innovation just by new projects springing up and then merging and collaborating together. Could you maybe explain, why you thought Synthetix was a good springboard? How does Synthetix really, integrate into dHedge and allow it to flourish? What was the choice in building on Synthetix rather than some of the other existing money Legos, as people like to call them around the industry?
So yeah, we wanted to create this closed sandbox, if you like, for the managers to be able to trade on, because we cannot just leave it kind of have an open system because of these problems that I explained before, that you cannot let the managers just trade any asset out there, right, on any DEX, because you could create your own asset, right, and put all your funds into one exit and sort of put the copy traders' money at risk in that way. So you needed kind of a closed system. And when you look across the board, you want a system where you have access to a lot of different assets, where you have low slippage. Those are some of the criteria we looked at. And I think it's only really Synthetix that can fulfill the requirements of dHedge. So on Synthetix, you have crypto assets like Bitcoin, Ethereum, 10 other crypto assets right on Synthetix right now, and that's a growing list. You can go long those assets. You can also go short those assets. So they have something called inverse assets, basically getting short exposure to these assets. So if you think of a hedge fund, they want to go both long and shorts, and that is possible on Synthetix today, which is really unique on a decentralized platform. But not only do you have crypto assets, you also have FX, so you can trade not only US dollar stablecoin, you can trade the Japanese yen, you can trade British sterling, you can trade AUD, etc. on Synthetix. You can trade commodities. So on Synthetix, you can trade long and short silver, gold. They just added oil as well. And they even are looking at the equity market. So currently you have two equity indices, Nikkei, which is the main equity index in Japan, and you have 𝗶𝗺𝗃, which is the UK major equity index on Synthetix. And this is a very fast growing list of assets that you can access to Synthetix. So that's really unique. And the second thing is slippage. So if you look at some other platforms that have been doing similar things that dHedge is doing in a decentralized fashion, they've had major problems with the traders incurring slippage, trading on AMMs or other type of DEXs. But on Synthetix, you can show up to their smart contract and you're guaranteed to be able to trade at the Oracle price, meaning you don't incur any slippage, and they have this infinite liquidity model. So it doesn't matter how big you are. You can have $1 million in a pool. You need to reallocate. You incur zero slippage, which is better than a centralized exchange. Like even if you trade on Binance, you will incur some slippage depending on the size of your trade. That's not the case on Synthetix. So on a DEX, you have lower slippage than on a centralized exchange. So I think this makes Synthetix really unique, and that's why we chosen to build on top of them. If you like, we sort of the managers or system or smart contracts integrate with the synthetic exchange, right? So that is really unique. I'm not aware of any other platform where we could have built this system on top of.
Yeah. I'm not too familiar with the infinite liquidity model, but that seems really critical to anyone that's looking to copy trade for the reasons you mentioned. You can't have someone copy trading when they're able to create their own asset and then drive the price whichever way they desire, whether that's up or down. And that's something that's really, it's important for copy traders, but as well as it's going to be important for any trader. Is there something that you really find exciting about dHedge compared to some of the other protocols that you've built? You mentioned 𝗵𝗶𝗶𝗵, which I'm familiar with, and some of the other projects, which sounded a little bit more like, traditional venture funds in terms of Apollo Capital. Is there something that excites you about dHedge that's a little bit different from the other protocols that you built?
I think, I think it's kind of uncharted territory when it comes to decentralized asset management. So I think, we are quickly growing the value on dHedge. And I think we have a real chance of taking kind of a major share of the decentralized asset management market. And yeah, I think, some of the other verticals within DeFi, I think, are very competitive. So when it comes to AMMs, for example, that's a super competitive space. There is no reason why, you cannot just copy a curve from another one, from another AMM. And I think we have seen an explosion in the number of AMMs coming to the market, certainly during the last 3-4 months. And I think the next phase is probably that you will have upgradable, fully customized curves when it comes to AMMs and the way they work. Uniswap will come out with their next version of the protocol. You have Curve and you have all the other derivatives of these AMMs, and it will be very hard to compete, I think, in that market. Whilst I think building having pools on top of dHedge that are building a sustainable track record over time, where everyone can measure the risk-adjusted returns over certain time periods. You can build a transparent track record. That's really, I think, hard to replicate. Because you're not just going to move the capital out of a pool into some new protocol that is being built, because you will destroy your track record that you have built on something like dHedge, right? So, we are focusing on building a strong community, managers that have a strong track record. I know they will rise to the top of the leaderboard on dHedge, and I think I think it will be a high barrier to entry to sort of move that funds over to some other platform. I think in the DeFi space, in the AMM space, when it comes to all the yield farming stuff that is going on, you see the capital can move very easily between the protocols. I don't think that will be the case necessarily with dHedge. So I think that makes it pretty unique compared to many other DeFi protocols where, you see capital moving around to where the highest yield is at the moment.
Yeah, absolutely. And you mentioned kind of the barrier to entry, which we certainly see in traditional funds. There's various regulation exams that managers have to fulfill. And it makes me think, how much can the decentralized asset management protocols, how much can they encroach on the existing traditional funds? And if there's any overlap there, is that something that you expect, is to kind of take some market share away from the existing traditional fund managers, or is it more of building from the ground up in cryptocurrency and treating it more from the decentralized roots rather than from the asset management roots, as a more general industry?
Yeah, I think that's a great question. I think, overall in DeFi, we haven't really seen DeFi being adopted by the traditional players, right?
At least not yet. They're certainly discovering.
I think that's probably going to happen at some point.
Yeah, they're discovering Bitcoin, but they haven't quite gotten to that DeFi realm just yet, it seems.
Exactly. And you will have, you probably will have at some point some overlap, right? You will have maybe some traditional player accepting stable coins or something like that, and then you might have some yield products at some point. But I think we are pretty far away from kind of the mainstream traditional adoption of DeFi primitives. And I don't think we need that in the short term or medium term either, for that matter, because we have plenty of growth within DeFi, crypto native growth. We have, a new generation of traders, speculators, technologists, people interested in crypto that is growing the space at a very fast pace. So, I think we can grow kind of natively within crypto for a long time. At some point we might have some crossover, which is super exciting if that were to happen. I don't expect traditional fund managers to move over to the rails of dHedge anytime soon. They're not set up for interacting with DeFi protocols. As you say, like Bitcoin is still very foreign to many traditional investors.
Yeah. And it seems that maybe the reason for that isn't so much that crypto isn't ready to scale or that, the blockchain industry isn't ready to scale. It's more on the other side that the traditional finance just isn't quite ready to delve into that. And there's certainly been criticisms that the industry from an investment perspective isn't mature. It is too speculative. It seems like as more institutional players come into the system, that narrative is starting to diminish a little bit. But there are certainly other concerns like scaling from the blockchain side, Ethereum, not being able to process transactions. Is that something that dHedge has seen, kind of like a bottleneck because of Ethereum gas and necessity that it needs to scale?
Yeah, I think that's something that everyone is struggling with in DeFi at the moment. To create a pool on dHedge, it might cost $50 today, depending on the gas price. To invest, to exit the pool, all costs gas, right? And it's not that cheap. We wish it was much cheaper. So yeah, that's something we struggle with, like everyone else in DeFi at the moment. I see a lot of promise coming from layer 2. Synthetics have advanced plans to move to optimistic rollups, and we plan to follow them. And I think once we have optimistic implemented on synthetics and dHedge, I think the user experience will be amazing because you can trade with no lag. There is currently kind of this settlement issue on synthetics where you have to wait 3 minutes before a trade is settled. It waits for an Oracle update. All those things will just work so much better where prices will not be a problem anymore. So we can't wait to there, but it's a 2021 event, and that will really change DeFi for the better.
That makes me think of some outrageous arbitrage opportunities. If that there's zero lag in addition to zero slippage, it seems like there's certainly some opportunities for arbitrage trading in those kinds of markets.
Yeah, I know it's a good point. I think with the volume we are seeing on DEXs today, it used to be like something like Uniswap were always lagging centralized exchanges, but as you have seen, certainly in mid-cap coins, the volume on DEXs are often higher than on centralized exchanges. Same thing with stable coins. So you could argue that there's actually DEXs that are driving the price discovery and not the other way around.
Yeah, and that certainly seems to be a novel theme this time around rather than some of these past market cycles where there was barriers to entry because of these centralized exchanges. For example, 2017, where Bittrex and Binance were not allowing any new customers because they were just overcrowded. We're seeing some different barriers to entry this time around in this market cycle, dealing with scaling and, like we just said, kind of the more openness that's going on in this cycle with decentralized exchanges compared to centralized.
Yeah, I think I think it's super exciting what's happening with DEXs because 12 months ago we were arguing, it's the experience is lagging to centralized exchanges, and it really needs to be much better for it to get adoption. But if you look at it today, you have in many cases lower slippage, higher volume on many coins on DEXs versus centralized exchanges, and the experience is just so much better because you don't have to sign up to an exchange, you don't have to remember a password, your 2FA, you don't need anything of that, and you can just access and trade right away. You don't have to worry about, at least in theory, right, that the security is not there because you don't really lose custody of your funds until you trade. So the experience is starting to get just much better on DEXs. And this is before L2. And after L2, it's just going to be 10x better than anything in the centralized world.
Yeah, absolutely. I mean, layer 2 and 2.0 has been long awaited for years now. And it seems like once that gets released, the expectation is everything's just going to click. And all these improvements are going to be made and they're going to allow for a lot of scalability, a lot more users. I don't really see it that way. I think it is a progression, and layer 2 is going to enable the ability for all these users to come on. But then there is still the necessity for incentives and kind of there needs to be a reason that these people are using protocols. Not just that they're able to now, but everyone's going to want their piece of the pie. And just because Ethereum allows more users, there still needs to be some of the pie left for newcomers to the system. And it's curious what all, if adoption does increase and more users come to these platforms, what that's going to do to APYs and yields kind of across the farming industry. And, we talked a lot about the asset managements and kind of the tokens and decentralized exchanges, but not so much about yield farming and kind of the developments on that side. Is there plans for dHedge to incorporate yield farming? Do you see that as kind of like a short-term market cycle that, will probably die out? What are your opinions and your expectations on yield farming kind of into the future and as a part of dHedge as well?
Yeah, it's going to be part of dHedge, and we're actually going to launch it fairly soon, within a couple of weeks from where this interview is recorded. So it will be out live very, very shortly. We call it performance mining, which we want to incentivize managers to perform greatly on the platform, and we will incentivize people investing in these managers that are performing the best. We have thought about making the system in a way that is non-gameable. I think we have seen some problems with some of the yield farms where it's quite easy to game them, but we want to make something that is sustainable, that's really increasing the value of the whole protocol. We are going to lock up the tokens for 1 year for the people who farm on dHedge. They are still going to be staked for that year, so you can still use it, the tokens in the system, but they will be locked up, similar to what's happening on Synthetix. If you stake on Synthetix, your tokens are locked for 1 year, but you can still use them as staking collateral. And I think it's a sustainable model. It's a way to distribute the token. It's a way to incentivize users to come to the platform. And one advantage of having a token on top of a platform is that you can build a strong community around that token, and you can align everyone. You can align the builders, the developers, the users, the governors of the platform, and it can also be one of the same, right? You can be a user, a developer, a governor of the platform, and it also creates, I think, a sustainable moat, if you like, or a barrier to entry, which we wouldn't have without the token. So we are super excited about launching the performance mining program on dHedge. And I think it can run for a very long time. We have over 50% of the token in the DAO, and the users can, over time, decide to use a large part of that for this kind of incentives. Yeah, we'll try to take the best learnings from other DeFi protocols in the space when we design the program.
Gotcha. Yeah, that is a great segue, because you mentioned the DAO and how the token, it sounds like a reward for performance mining on dHedge. Could you talk a little bit more about the value proposition and how it's going to generate, maybe some aspect from the system, whether that's fees, but it does seem across the industry from the past DeFi protocols. I'm thinking of 𝗁𝗏, how it aligns governance as well as some of the rewards from the system, and that the community can reap the benefits just by holding the coin. Is that something similar in the dHedge DAO, or do you have some more specific plans for your token on kind of the value proposition and how you...
Yeah, I think we have a really unique token, and we haven't talked much about exactly how it will work. So I think the market will be kind of surprised how it will all fit together, and I can share some of that now. Personally, I think, a high-level comment is that, if you want to build an unstoppable decentralized protocol and you need some kind of way to upgrade the protocol going forward, you need a governance token, right? Because we don't know of any other way to kind of do decentralized governance without a token. So unless you want to have a protocol that will never change, like Bitcoin, you need some kind of governance token. So that's number one. Like, it's hard to get away without a token if you have a protocol that you think can benefit from evolving over time. And then I think you can build in strong economic incentives around the token. In our case, the dHedge protocol has an admin fee of 10%. So similar to perhaps Compound, how they have a protocol fee as well. dHedge is a protocol fee of 10%, that captures the income on the platform. If you think about the income on the platform, what is that? Well, the managers of the platform, they can charge a fee. Currently, we have performance fees, so they can set their own performance fees. Those fees are actually charged in their own pool tokens. So the managers create a pool. They set their own performance fees. They earn performance fees if they have great performance, and they earn that in their own pool tokens. So their share of their own pool will increase over time. But there is also a 10% admin fee on the protocol that goes to a DAO. So this DAO collects pool tokens. So this DAO fills up with the best performing pools over time on the platform. You can see it as a composite pool or a fund of funds type of structure. That will consist of the best performing managers over time. This DAO will be controlled by the DHT stakers. So we will have native staking on the platform where you lock up the token over a certain time period, similar to Curve or 𝗵𝗶𝗃𝗵, where you have a boost if you lock up the token for longer. And by doing that, you can direct how this composite pool is managed. So for example, you can imagine the DHT stakers putting up a proposal to perhaps liquidate underperforming pools in this composite pool and convert the assets to SUSD and distribute those to DHT stakers. We are also looking to bootstrap this composite pool. We recently announced that the DAO is looking to incentivize managers to come to the dHedge platform. So, there was an announcement going out just over a week ago saying that the DAO will invest 500,000 SUSD into managers, moving to the dHedge platform. And that's another way of bootstrapping this composite pool and give immediate value and incentive to the DHT token holders and stakers once the native staking is launched, which we expect to happen before the end of this year.
Awesome. Yeah, DeFi Slate is a proud applicant to that grant program. So we have a fund on dHedge now. So if you're listening to this, everyone go check out dHedge. Not investment advice to join the pool, but definitely check out the different pools out there. And I'm sure DeFi Slate is towards the top of the leaderboard still. So we're planning on implementing some more features and kind of adding to the complexity of the fund over there very soon. But the idea of a composite fund DAO is really interesting because, like you said, you're essentially a fund of funds where anyone is able to create their fund, and then that composite fund is decentralized. It is managed in a decentralized way.
Exactly, and the only way to get exposure to this fund of fund, which consists of the best managers on dHedge, is to stake DHT. Right, that's the only way you can get exposure to kind of all the economic activity on dHedge.
Yeah, that's so key because I know there's lots of tools out there that are trying to pick apart kind of aspects of what dHedge enables. Where I know there's certain analytics tools that try to pinpoint wallets and addresses to the top traders, and there's certain tools that you can use to either front run those wallets in certain DEX trades or to copy trade those wallets when they're performing different on-chain transactions. But dHedge makes that all public in a decentralized way where you're able to invest, essentially copy trade one of these funds, one of these managers, or all of them at the same time in a composite way. So I think that is really innovative, really novel idea that even the other asset management protocols that I've seen aren't enabling.
And we recently launched a pretty cool feature where, as you say, obviously, working on top of Ethereum and open blockchain, all the trades are public. But we did launch a feature where the managers can share kind of their strategies and their thinking about the market, and share their alpha directly with their investors through manager posts. And they can choose to lock those posts, so only people who copy trade them can view those posts. and get inside the mind of the managers.
Gotcha. So an even more connected circumstance between the managers and the investors. That's going to be a clear differentiator. Is there any other differentiators that you want to mention between dHedge and some of the other asset management protocols that are out there now?
Yeah, one big one that I alluded to before is, not only can you trade crypto assets, but you can trade other tokenized assets, right? So I think, in the coming days, we will enable, the managers to trade oil, for example. So S-oil, which is synthetic oil, long and short oil, which is, really unique. And I think, in the coming months, we'll see many more assets being enabled by synthetics, and we plan to support all the assets that synthetics enable. We also have some interesting algo type of pools, and some of them might be native to dHedge. So right now, we just launched a test pool kind of mirroring the depth of synthetics. So if you're a synthetics staker, you could buy this pool, and it has 0 fees, and you can hedge your debt as an ex-staker. If you're as an ex-staker, you incur this debt, which is kind of the outstanding synth on synthetics. And by buying this pool, by copy-trading this pool on dHedge, you can hedge that position. So I think this is a pretty cool feature as well that I think will attract some of the synthetics community.
Awesome. Yeah. And we are kind of nearing the end of our time, but I'm curious, as more money Legos pop up and more kind of complex solutions get added, another one that comes to mind is the options trading that was just enabled on 𝗏𝗡i and the collaboration between 𝗻𝗏 and 𝗏𝗏𝗃𝗏𝗃 options. That sounds like a really cool opportunity for options traders to get involved on chain. I'm curious, do you guys have any partnerships or major updates that are coming up that you want to allude to? Maybe you can't speak too much about, but is there any other integrations, maybe beyond synthetics, that you're really excited about in the coming times?
Yeah, for sure. I mean, we will enable some of that composability as well. Not just with synthetics, but at some point you will see managers being able to use their assets to enhance yield, if you like, by using certain protocols, right? So if it's perhaps lending or some more advanced strategies that will be enabled by the protocol. And right now, I think for the rest of this year we have a very long list of features that we want to release to the market. But looking beyond that, I think we want to enable the managers to access some of these other protocols that you mentioned.
Awesome. Yeah, and before we wrap up, you've shared some serious alpha, not only on dHedge, but also just across the industry. So if anyone is still listening, this is some really important and actionable knowledge that's being shared. To wrap up, who is one person that you would like the opportunity to pitch dHedge to? Maybe just a 1 minute, what would you say to them? And what's someone, maybe it's Elon Musk or Warren Buffett, anyone in the industry that you can think of, who would you want to pitch dHedge to, and what would you say?
There are so many influencers out there, so many Twitter traders who have a great following. Perhaps on Twitter, they gave recommendations every day over Twitter or YouTube or Telegram. If you really want to prove yourself, come to dHedge and everyone can see your track record. If you're really bringing alpha to the table, why not get on dHedge and prove yourself? And no one can doubt your trading skill if you move to dHedge, because you will rise to the top of the leaderboard if you really have what it takes.
Awesome. All right, Henrik, it was really great talking to you today. I appreciate you coming on. It was super informational, and I know Andy and myself are both excited to continue with dHedge and really step up our fund over there. And as we continue, I mean, there's plenty of great features that are continuing to get added. So I'm really interested in the composite fund as well, and how that can grow. So thanks for coming on. Is there anything else that you have that you want to shout out or give to the audience listening?
I was super happy to have you guys on the platform, and I'll follow your performance and what you do on the platform very closely. And super excited to have you guys on the platform and can't wait what you have in store.
Awesome. Yeah, thanks for coming out. All right. This has been Henrik and Rob on DeFi by Design. Thank you everyone for listening, and we'll see you next time. Bye-bye.
Thanks for listening to the DeFi by Design podcast. Until next time, DeFi Slate Team.